Breaking news out of Washington, President Donald Trump has ordered the removal of Federal Reserve Governor Lisa Cook, accusing her of making false statements on mortgage documents. Cook has fired back, saying Trump has no authority to remove her, and she refuses to resign. This move is unprecedented. No president has ever dismissed a sitting member of the Fed's Board of Governors. So what's going on, and why does it matter for your money? Let's break it down. We'll explain who Lisa Cook is, why Trump acted, her response, the legal stakes, and the market fallout. Quick explainer, 5 minutes, let's go.
Lisa Cook was appointed to the Fed's Board of Governors in 2022 by President Joe Biden. She made history as the first African-American woman on the Fed's board. She's one of 7 governors who sit on the Federal Open Market Committee, which sets U.S. interest rates. A respected economist, Cook taught at Michigan State, advised policymakers, and worked at Treasury before joining the Fed. She's generally voted with Chair Jerome Powell and supported holding rates recently, but now she's at the center of a political firestorm. According to Trump's posts, the firing ties to allegations Cook signed conflicting mortgage documents. He posted claims on Truth Social, saying 2 mortgage statements contradict each other. One document in Michigan listed a property as primary residence. 2 weeks later, a Georgia document reportedly did the same. The allegations were pushed publicly by Bill Pulte, a Trump ally, who sent a criminal referral to the Justice Department. Trump invoked what he called constitutional authority to remove her for cause. It's still unclear whether federal prosecutors have opened an investigation. Cook has responded defiantly. Trump purported to fire me for cause when no cause exists under the law, and he has no authority to do so. I will not resign. Her attorney, Abby David Lowell, said they will seek legal action to block what they call an illegal attempt. Cook emphasized her commitment to serving the economy and refused to be bullied out of her role. Legal experts say court challenges are likely. The administration must prove a valid cause for removal. The Fed is designed to be independent from politics. Governors serve 14-year terms and can be removed only for cause. That high bar protects monetary policy from White House pressure. Presidents often criticize the Fed. Trump himself pressured Powell, but direct removal of a sitting governor is unprecedented. Legal scholars say courts will scrutinize whether the president had lawful cause for removal. If courts find no valid cause, the firing could be struck down as unconstitutional. The outcome would shape how insulated the Fed remains from political interference for years. At stake, the independence of America's central bank and the rules that protect monetary policy. Markets reacted quickly. The U.S. dollar dipped before recovering. Government bond yields ticked higher as investors priced uncertainty about Fed independence. European markets opened lower, reflecting global concern. Analysts warn that reshaping the Fed could undermine confidence in U.S. stability. Global investors might rethink exposure to American assets if political interference grows. For markets, predictability in central banking matters, and this move raises questions. Next, potential DOJ inquiries and almost certainly court challenges over presidential authority. Meanwhile, the Fed, led by Powell, faces heavier political scrutiny as it plans future rate moves. The legal fight and market reaction will tell whether this becomes a lasting shift or a short-term crisis.
This is more than a personal clash. It's a fight over Fed independence. If Trump can remove Fed officials he disagrees with, it could change monetary policy for decades. Do you think the president should have this power, or is it dangerous interference? Tell us in the comments, subscribe and hit the bell for updates.